This video covers assurance engagements frameworks and relationships for ACCA's Paper F8, Audit and Assurance. If you find this free revision video helpful, please let me know by hitting the like button. To view all the free revision videos available for Paper F8 and for hints and tips on how to pass your ACCA exams first time, visit my website www.accountingcollege.co.uk or subscribe to my YouTube channel. There are two types of assurance engagement frameworks: reasonable assurance engagements and limited assurance engagements. With reasonable assurance engagements, the practitioner gathers sufficient appropriate evidence, enough to be able to draw reasonable but not absolute conclusions. Concludes that the subject matter used confirms in all material respects with suitable criteria, and provides a report. With reasonable assurance engagements, reports are often given in the form of a positive statement of opinion. An example of a reasonable assurance engagement is a statutory audit. In our opinion, the financial statements present a true and fair view. With limited assurance engagements, the practitioner gathers sufficient appropriate evidence, enough to be able to be satisfied that the subject matter is plausible, and provides a report. With limited assurance engagements, reports are often given in the form of a negative statement of opinion. For example, nothing has come to our attention. Examples of limited assurance engagements are review of financial statements, risk assessment reviews, system reliability reports, reports on social and environment issues, reviews of internal control, public sector value for money reviews. Expectations gap. Some users believe assurance engagements provide absolute assurance. For example, they believe that an audit opinion is a guarantee that the financial statements of an organization are correct. This misconception is known as the expectation gap. As you have seen from the two types of assurance frameworks, the greatest level of assurance a practitioner can provide is a reasonable but not absolute conclusion. Two reasons for expressing an unqualified assurance engagement conclusion for an audit. Limitation on scope. Practitioners simply can't find the evidence to prove that the financial statements are correct. Assertions not fairly stated. Practitioners may find that figures in the financial statements are materially misstated. Assurance relationships. Stakeholders, accountability, stewardship, and agency relationships are all central to the concept of corporate governance. Corporate governance is a system by which companies are directed and controlled in the interest of shareholders and other stakeholders. A stakeholder is anyone who can affect or can be affected by the policies or activities of an organization. Stakeholder theory is a theory that companies are accountable to more than just shareholders. They are accountable to stakeholders as well. Various stakeholders need information about organizations in order to make decisions. For example, shareholders need information to decide whether to alter their shareholdings. Employees need information in order to make career decisions. Suppliers and customers need information to manage their future trading relationships. Government need information to judge whether the right amount of taxes have been paid. Accountability means that people in positions of power can be held to account for their actions. Directors are in a position of power. They are responsible for managing the organization in order to achieve the objectives of the organization. This is normally the maximization of shareholders' wealth. Directors are accountable to shareholders and to society, stakeholders at large, for their decisions made on behalf of the organization's owners, and for using the assets of the company efficiently and effectively. Fiduciary relationship. Stewardship is the responsibility to take good care of resources. This relationship, where one person has a duty of care towards someone else, is known as a fiduciary relationship. Fiduciary relationship is the duty to act solely in another party's interests. For example, when directors have been trusted to manage and protect an organisation for shareholders, directors have the responsibility to carry out their role in the best interest of the shareholders. Agency relationships. Agency theory with regards to organisation is a group of concepts concerned with resolving the problems caused by the separation of ownership and control between a principal and an agent. Agency relationships occur when one party, the principal, employs another party, the agent, to perform a task on their behalf. The agency relationship between directors and shareholders. Shareholders employ directors to run their organisation on their behalf. Directors are accountable for the running of the organisation. An organisation's management are required to produce financial statements, giving an account of their stewardship of the organisation. Due to the separation of ownership, potential conflicts of interest may arise. For example, directors' objectives are often short-term. By this we mean they're concerned with increased wages, bonuses, and so forth. While shareholders' objectives are often long-term, like the objective of wealth maximisation. This divorce between ownership and control with these differing objectives can create agency problems, requiring some kind of independent validation of the financial statements. The agency relationship between auditors and shareholders. Shareholders employ auditors to provide an independent review of the company's financial reporting. Auditors are accountable for ensuring their review is conducted on an independent, competent, and adequate basis. Shareholders must be able to rely on the auditor's report. If you found this free revision video helpful, please let me know by hitting the like button. To view all the free revision videos available for paper F8 and for hints and tips on how to pass your ACCA exams first time, visit my website www.accountingcollege.co.uk or subscribe to my YouTube channel.